Hey, what's going on, everyone? Haven't talked about my personal portfolio here in a while, so I just wanted to give a quick update on how I'm doing, what stocks I'm buying, plus I'll also talk about the risk of options. Options have the potential to make you lots of money, but every so often you could potentially get into a trade where you find yourself in a big hole, and that's the current situation that I'm in, so I want to share that with you as well. Here's also an updated look at the progression of the portfolio and all the different dates that I've reached different 10K milestones. So recently I did pass the 80K mark, and then the stock market did pull back a little after this last week's red week. But really, this is a mix of me putting in my own money as well as the money that I've already put into the portfolio, just continue to grow on its own via capital appreciation or getting those nice juicy dividends as a form of passive income. So it only took me 23 days to go from 70K to 80K. So as much as I wish I could keep up that blistering pace, I know that's not really realistic. I think 10K every 2 months is a bit more manageable. So if you enjoy getting these updates on what I'm buying and selling, my thought process behind it, the monthly dividends that I get every month, I always go over with you guys, as well as the options trading and all the income I get from that. I reveal that every month. So be sure to hit that subscribe button and like this video so it can help out with the YouTube algorithm and my video can be seen by more than just a few people for once. Also, check out the last video I recently made on Spotify and why the stock just continues to keep going up and why it's so loved by Cathie Wood. This is basically a download of my recent stock buys from the Fidelity site, and then I use this to make a pivot table, which I will be going over here with you guys. So what this pivot is, it's basically all the new stocks I've been buying in 2021. Since the start of the year, basically it has the symbol, the amount that I bought, the amount of shares, and the percent of capital as it pertains to that particular stock to my overall percent in 2021. So first stock, we all know Apple. I bought basically one share at 132.50. The stock has had a little bit of a pullback, but Apple, as we know, it's very hard to bet against these guys. And as they try to get into this EV space, let's see how far they can go. Apple has so much money on their balance sheet. There's so many, literally endless opportunities for them to continue to grow that business. All right, moving on here, we have AbbVie. This is a great pharmaceutical company, has consistent cash flows, and people are really liking that company just for its great dividend and hoping that it can continue those cash flows even as their best-selling drug Humira expires its patent protection here shortly. This, by the way, is going in alphabetical order. So next we have ARKK. This is the Cathie Wood all-inclusive, just a generalized ETF of all the different ARK ETFs out there. So I prefer just buying into the ARKK one because I like all of their innovative features. I didn't necessarily want to allocate just to one particular sector. So I've been buying pretty heavily here. You can see almost $1,000 in total capital. 15% of the new money that I've been putting in has gone toward ARKK. And you guys can tell I've been putting out a lot of videos about them. Did one on Roku, did one on Spotify, and I'm about to do one on Square here, which is announcing their earnings shortly. So then we also have Equinix. This is actually one of my bigger positions in the portfolio, but I haven't added to this particular company since 2019. They've been on a pullback, which is pretty rare for this particular stock. It's been trading kind of sideways, but I was looking at their most recent earnings report and it really just had nothing but great news again. The growth is a little bit slow, so that maybe that's why the stock price has stopped increasing as much, but they're still making very good money and continuing to increase that top line even if it is quite slower. So Equinix, one share of them is almost $700. So that's why the percent of capital to them might look a little inflated. But like I said, it's been almost 2 years since I last bought them, so I thought I was long overdue. So probably won't be buying any more anytime soon unless it continues to go on a massive pullback. So about 2 shares of Honeywell throughout this year. Honeywell is a great diversified industrial stock. They make a lot of fans, home thermostats, security systems, fire alarm systems, basically things that we probably take for granted in everyday life, but it's obviously very important. Also a huge player in government contracts, so government makes up a pretty good percentage of their revenue as well. And then next here we have IPOE. So this is actually the largest position that I've been adding to. I actually didn't own any shares prior to this, but IPOE, for those of you who don't know, this is basically Chamath Palihapitiya's SPAC for SoFi Financial. So the merger is still going through. It's expected to be completed in Q1. Recently made a video about this, so be sure to check that out if you don't know what SoFi is. I poured in 58 shares of IPOE, and I'll probably be adding more shares once the actual merger goes through. So very bullish on this company. I know a lot of people have been adding lots of shares to this. Definitely looking forward to the news of when this merger actually goes through. Should be any day now. So we also have MasterCard, about 1 share of them. So this is a company that's still struggling here because, you know, a lot of people aren't going on as much travel and vacation. So that's where MasterCard actually makes a lot of their money, is when people swipe their cards, booking flights, booking hotels, spending all that money that they normally would on transportation and going on vacation. So MasterCard, I'm sure, will rebound once that is lifted, once people are comfortable and feel safe going back out and having a fun time. So we got McDonald's, Medical Properties Trust, and Realty Income, not Reality. These are basically all in the real estate space, even McDonald's with their fast food businesses. Real estate, of course, is always time and tested business model. Don't see that going away anytime soon. Medical Properties Trust also just announced a whole 4% increase in their dividend from 27 cents to 28 cents. Hey, every little penny in retirement matters, so you still get a starting yield if you bought the stock today of just under 5%. Hospitals, as we know, are always going to be existing. O is a monthly payer of dividends, so always like to get that monthly passive income. Finishing off the list here, we have the ETFs QQQ, QYLD. QQQ basically tracks the NASDAQ top 100 stocks. You get great exposure to companies like Apple, Microsoft, Amazon, Google, all companies that would cost you so much money to buy individually, but you can just basically get a small piece of them if you invest into this great ETF that is QQQ. So slowly I'm stockpiling my shares of QQQ, hoping to get to 100 and be able to do options trading on them, but that's going to be a long-term goal. One that I am super close to getting to 100 shares of is QYLD. So I'm actually right now, I think I'm about 82 shares. So I'll probably round out that last 18 shares this week. And then once I have 100 shares, stay tuned because I'm going to have actually a new strategy on another ETF I'm going to be buying that does a very similar covered calls ETF, get paid those premiums every month strategy. So once I reach 100 shares of that, I'm just going to have the dividends reinvest, and then I'm going to focus my money on another very similar type strategy ETF for more diversification. Then you can see here I bought 3 shares of Square, almost $1,000 now in 2021. I'm actually going to consistently be buying more of Square. 11% of all new money so far. So Square is actually interesting because, so I made a video on January 28th talking about the whole GameStop fiasco, and at the end of that video I talked about how Square, the stock price became very attractive because it dipped down to that $200 level, and since that video was put up, the stock has increased 36% in just 1 month. So I'm going to be making a video later this week about Square's earnings when they announce them later this week. I really got that one circled on my calendar, and I'm definitely going to be buying more shares, whether it's good news or bad news, because I really believe in Square's business model. And then of course we have Visa. All of the same things I said about MasterCard can be applied to Visa. Bought 2 more shares of them for about 6% of all new money. So far in 2021, have put in about $6,500 into the portfolio, and I'm just going to continuously be dollar cost averaging in every single week, continuing to buy great companies, continuing to get those great gains. To me, I don't really look at stock price that much. I just really try to buy great companies and let the hardworking individuals at those companies continue to do a great job and get me a return. Also wanted to talk about the NEO options trading I've been doing. So NEO is now actually the largest position in my portfolio, and that's due to a put option being exercised and kind of gone wrong here. So basically what happened was the day after President's Day, or 2/16, and was I agreed to buy 100 shares of NEO at 58.5 or lower. The stock price, basically, if it was 58.6, I would get to keep my premium, the $82. So this is the money that I get to keep. This was a weekly contract, so it expired on Friday. If the stock price was like $59, no problem. I wouldn't be obligated to buy 100 shares. I get to keep the $82. I get to just move on in life. So this particular week, a lot of things actually went wrong. This is where options trading can be a little bit like gambling. You don't really know if a stock is going to go up or down, and eventually your luck will kind of run out here. NEO, when I sold the premium, was trading at about 65, so I didn't think it was going to fall under 58.5 for that week. But what I think happened was a lot of people bought into Lucid Motors, which is another hot stock these days. So people that probably bought into that were also holders of NEO and Tesla, which went down this past week. as they reallocated some of their money. So that caused the stock price of NIO to fall down. And on Friday, it was actually trading for just 55.04. At the end of Friday, I had to buy 100 shares of NIO, but I didn't get it at this 55.04 price. No, I got it at this 58.5 price. So my average cost is $5,850. Now we can see currently I'm actually down about $346. So I did get to keep the $82 in premium. You always get this. Now I'm not freaking out too much over this because I believe in NIO in the long run. That's why I only do this on companies that I actually think will be at a higher price in the future than they are today. So I don't really do this on most hot stocks, just ones that I am feeling more bullish about. NIO I think will be a huge EV maker in the market of China. And the really cool part about the wheel strategy is that now that I have 100 shares of NIO, I can actually do a covered call on them. And I can get paid premium to basically sell my shares at a certain date. I think Robinhood's view of options trading is actually by far the best of any brokerage. I don't do any of the actual trading on here. I do that all on Fidelity, but I use Robinhood to determine which options contracts I'm gonna do. So now I'll be selling a call, and there's one that expires at the end of this upcoming Friday. So I want to get one that's above my average cost, which is 58.5. So anything above that, so I can get a call at 59, which is basically saying I'm gonna sell my shares at $59 at the end of Friday, as long as NIO shares are above $59 strike price. So let's say it's the end of day Friday and NIO is now trading at $58.99. I actually would still get to keep my shares of NIO, and I would also get to keep my premium. In this case is $98. It's always times 100. But what's also very interesting right now about NIO is that they actually report earnings on March 1st. So let's say maybe I wanted to get a little bit more greedy, and let's say I wanted a contract that was 2 weeks out, so March 5th. Now you'll notice the premiums have went up significantly. And this is both because now there's an extra week added, but also because NIO is reporting the earnings on March 1st. So there's potential for a lot of volatility. And honestly, I think a lot of positive news has already been priced into NIO. It's a huge chance that the stock price might fall. But if I did want to do a call at $59, I could potentially now get paid $328. I also get that upside, that $50 from 58.5 to 59, as basically a short-term capital gain. Now there's still a few risks here, and that's more so is if NIO, instead of going up, it just continues to go down. So right now it's 55.5. What if it fell down to $52 if the earnings report was really bad? Now I'm down even more money. But hey, at the end of the day, you still get to keep that premium. Look at it as I already own those shares, so it'd basically be a sunk cost anyway. Another potential risk is if I do the 59 strike price, well, what if NIO actually has a phenomenal earnings report and then the stock price, it just zooms all the way to $62? Well, if it's now March 5th, I have to sell those shares at the $59 mark. I basically lose all that upside of what the stock price could be if it exceeded the $59. So yes, options trading, doing the wheel strategy, it could lead to some huge profits, but there's definitely risk involved. If you guys have any questions, be sure to let me know in the comments below and tell me what you guys are also buying, and I will buy, stash, collect, cash you later. Be sure to check out my Spotify video because YouTube won't show it to anybody.